What if I told you that you could potentially pay less tax than most other businesses in South Africa? Now listen up, because this is something that is very underutilized and very few people know about. And these are the special tax types that apply to businesses. Now, in the previous video that I did, I explained tax as a whole, especially when it applies to businesses. So a company, for example, would pay 27% tax at a flat rate, whereas an individual or sole proprietor would still be paying tax at those brackets that they fall in. So what does that mean? The more money you make, the more tax you pay. Now, this incentive, or these incentives rather, were created to benefit small businesses. And these are the special tax types. Now, the first one I'm going to start off with is a small business corporation. Now, the small business corporation is designed for companies predominantly and other businesses of a juristic nature. But if we use the company example that I told you guys about last week, that pays 27% across the board. Now, imagine a structure that mimics the benefits of what a sole proprietor pays on brackets. So the first 100,000 Rand, nothing, no tax. And it slowly increases up until the point of 27%. So 550,000 Rand taxable income you would have to earn before you start paying at 27%. And remember that you only pay 27% at that amount, anything above that amount. So under 550,000 Rand, you still pay the small little taxes between each bracket. That is a massive, massive, massive saving for a small business. And that is a fantastic option for you from a cash flow perspective. There's also certain allowance benefits. So it's accelerated allowances for manufacturing goods, as well as for a depreciation allowance over several years. And it is applied faster than what you normally would under normal tax circumstances. So this is definitely something that you guys want to try out. The second one is micro businesses. Now, micro business is a different type of tax that a person pays. So forget everything we spoke about when it came to how to calculate tax and taxable income. Now we're actually looking at turnover. So turnover, the same thing that applies for the payment of VAT, is now going to apply for income tax. Now in everyone's mind they go, whoa, okay, but wait, that's big, because turnover doesn't mean profit. Turnover is the money that comes in. Why would I want to pay turnover tax when I'd rather pay tax on profit? Well, that's because the turnover tax rate is far lower than the normal income tax rate on profits. So, for example, as a micro business, you wouldn't be paying any turnover tax on your first 600,000. And then from 600 to around $1 million, you'd be paying 2%. And then from there 3% up until 2.3 million Rand, right? Now, the calculation has to be done by you, because if you have a large profit margin, then your normal income tax is going to be higher. If you've got lower profit margins, you might want to consider potentially looking at something like this, where you pay 0, 1%, 2% of your turnover. Again, it's a mathematical calculation, completely up to you. But the one nice upside is it takes care of the VAT. It takes care of the payment of VAT, capital gains, even dividends tax up to a certain point. So none of these taxes are things that you actually need to concern yourself with. And that's what makes it simple, and that's why it's a micro business, and that's why it's something that you should consider utilizing. Now, like with everything, there's always going to be certain prerequisites and requirements. So this cannot simply be applied by any business, any company, whenever they want, however they feel like, right? Now, the requirements for the small business corporation, aside from being a private company, is the fact that first 20 million Rand of revenue has to, it only applies to a company with 20 million Rand of revenue. Anything above that, unfortunately, will no longer apply. So that's just something to bear in mind. It is for smaller businesses, so that 20 million Rand is a prerequisite. Personal services and professional services, also doesn't apply unless, and there are exclusions, full-time employees. So basically what SARS is trying to do here is SARS doesn't want you to come in and provide services, simply consulting or legal advice, register as a company and get this benefit. Rather than that, SARS would prefer you to do that in your personal name and do it under the normal tax brackets, or do it as a company and pay your 27%. This incentive isn't designed for personal service providers. However, if you have employees, so then it's not just your personal service, it's not you providing a service under a company that is almost entirely yours. It's now a company that actually employs people, and those people provide services and potentially provide admin support and whatever the case is. It's a fully functional business, but up to that 20 million rand revenue limitation, right? So those are the type of companies. These are the limitations, but those are the primary ones that I want you guys to go home with. With the micro business, it's even less. So 2.3 million rand turnover, 5 million rand of assets. Personal services, unfortunately, is a no-go, right? So that is not something that we can look at when it comes to micro businesses. And the one thing with both of these as well, it has to be your business. So shareholding of any other sort of assets is any other sort of businesses or companies is a problem. It's entirely focused on one business and predominantly one business. And that is why it was designed. So if you are a shareholder of many, many businesses and you hold these shares in your personal name, then unfortunately you will not be able to qualify. But all in all, these are great, great tax incentives. So as you're growing your business, imagine being able to access these in order to make yourself profitable.